So thank you for taking time out to watch this video. As a disclaimer, this video is meant solely for education purpose, so please feel free to choose whether or not you wish to follow the learning. Do your own research and analysis before you take any decision. So wealth creation is a journey, right? And I'm sure today all of you are working very, very hard. Some of you are working with financial planners like myself. Some of you are doing your own financial management. But I thought, let me put out a video. Everybody has access to, money, and everybody has the same common concern. Can I build wealth? But how do I create wealth in the 21st century? And with the given current conditions of volatility, where fixed deposit rates are falling, where equity has become very, very volatile, is there a product which allows me to create long-term wealth and manage volatility? So the purpose of this video, and I request you to watch the whole video, you're going to find it very, very enlightening. So to start off with, the most important topic that one should consider is inflation, right? For many of you who understand what inflation is or don't understand, let me explain. So, and the reason I've selected the US is because the entire world asset classes follow the US. So we follow the US yield curve, or we follow the US Dow Jones, S&P 500, or the Fed. So look at the price of a simple cup of coffee in the 1970s. It was about 25 cents. Over the years, you see the cup of coffee has increased to $1.85, right? Now, if you think of inflation, it's the rate of increase in price over a given period of time, and it's typically called the money destroyer, right? So, whenever you factor a return on your portfolio, you want to factor the post-inflation impact, right? Now, if you're drinking 18 cups of coffee a day, $18 is a huge amount to be spending, and you possibly look at buying a cafe machine. The other possibilities, if you're planning for retirement or you're planning for child's education goal and all, you're going to be worried about inflation because maybe if you're planning for a crore, will that what is the value of that crore 20 years from now, right? Because if inflation is going to be the wealth destroyer, what is the value? Similarly, what are the tools for wealth creation? There is stocks, there is mutual funds, there's fixed deposits, there's real estate. So all of us have, we do this mix and match where we have multiple asset classes, and it's important, that you bring up an Excel, you write it down, and you measure the in post-inflation return. But then, is there anything else also that destroys money? Yes, tax. So in a country like India, where we pay taxes on virtually everything, there is also the GST impact, which I'm not going to talk about right now. But let's talk about the post-tax return. Okay, it's very, very clear from this that equity gives the best post-tax return. Now, people who favor gold, people who favor bank deposits, imagine the FD. The FD market in India is pretty huge, and all of us keep sizable amounts in FDs. If you look at the post-tax return, 5%, inflation is currently 6-7%. You're actually keeping your money, you're paying a bank to keep your money and grow your wealth in a negative manner. That's what you're doing, to summarize. So now that we have all understood that equity is one of the most favorable ways of building long-term wealth. Right here you have the Nifty over the years. Let's take an example of somebody who came in the 2008. The crash happened. Had he not redeemed, and that's the job of the financial planner or the person to motivate you to stay invested, right? If you see the next top, he would have come out and made double the money. Similarly, if somebody came in at the 2020, crash, and all of us saw what COVID did, it was a beautiful, fast, V-shaped recovery back up. And now, of course, we are looking at a sizable opportunity whereby we don't know whether the markets will go to all-time high or whether they will correct. But I can tell you, basis history, if you stay invested for 5 odd years, any point of time you're going to be making money. So it's very, very clear. You should stay invested and you will make money. But then let us say that somebody who entered here with a crore, okay, and today that crore double. Let us say his portfolio is at 4 CR today, right? And there's a crash of 20-30%. Is there a product out there which can help you switch the money to debt? I mean, many of us are apprehensive to switch money out because we think of the post-tax, we think of short-term capital gains, we think of the taxes, and so we don't act. But is there a product out there that can help you manage this volatility? And very happy to tell you, Sequoia family working with one of the top insurance companies in India called Bajaj Allianz Life. The stock is publicly traded. It's called Bajaj Finserv, the holding company, and I will show it to you in the subsequent slides. this is one of India's best companies, and we have created a product which will help you address. So what is the product feature? And these are the various crashes for you. So if you see in 2000, since 2000, the volatility has increased. So this is the exact reason why we need a product which helps us address volatility. So the need of the hour is a product that gives you access to equity and debt. It allows you to switch between equity and debt and attracts now no short-term capital gains. Okay, and the post-tax return beats inflation. And unlike a mutual fund SIP, so when you're putting money in a mutual fund SIP, what happens? If something is to happen where the payer is not around, the goal of the retirement, the person who was supposed to seed that fund is not there, the dream dies. So when you buy this product, you get a 10 times insurance cover built in. It also comes with a waiver of premium rider. So in case you're not around, and I will talk about this in the further video, you know, your insurance company will pay on your behalf. The product also has a much lower fund management cost of just 1.35%. So that is similar to that of your normal mutual fund. Your direct mutual funds are 1.35%. And I will show this, in subsequent part of this video. About when you buy a normal mutual fund, you pay a fund management cost of 2 odd percent. But when you buy this through this company, you have the lowest fund management charge for equity and debt in the country. And obviously, when you want to enter into the market, you're worried about volatility. So this product allows you to put money in debt and move money systematically every week, every month, quarterly between equity and debt. Also, once the fund has built in a sizable corpus, you can withdraw money systematically. So you can instruct the system to pull money out into your saving bank account, and you can do that. Now, obviously, one will say, Mark, I'm a large cap investor. No, I'm an aggressive investor. I'm a mid cap investor. No, I like multi cap. So this product allows the universe of funds. So you have large cap, you have mid cap, you have multi cap, you have balance, you have liquid, you have bond. So divide your money across funds just with one folio. And obviously, completely digital, so no paperwork. Once you have started the fund, you can switch through an OTP. The entire process takes under 30 seconds. Now, this is the important thing for all of you building long-term wealth. So let us say I'm 40 or I'm 45 and I'm trying to build wealth for retirement. Okay, and let us say subsequently, I'm putting money. Let's take two scenarios: in a mutual fund or this product. What happens if during this payment period, if something happens to me in a mutual fund, right? The dream is dead. There's nobody more to put money, so the fund is there. Your nominee has to take out that money and then enjoy. Whereas in this case, there will be a waiver of premium benefit. So in case of the accident, permanent total disability of the life assured during the premium payment term, okay, and this is considering if you're taking it on your life, premiums for the rest of the term will be waived and the policy will continue. Or an early occurrence of death, okay, the premiums stand waived and the dream of building this wealth continues. And the best part is the survival benefit. Should you survive the term, very happy to tell you, this refunds all the insurance cost plus the cost of this rider. So there is a complete refund of the rider with the insurance costs. So if you're thinking you're giving a donation, absolutely not. You're covering your risk during this payment period. If you're not around, Bajaj will pay for it. And should you survive as a birthday gift on your 60th birthday, you get all this money back. Low FMC. So if I was you, I would go and open up my mutual funds which I have bought, and I would compare what is the FMC. Very happy to tell you this is 1.35%, as you can see. Systematic plan, we spoke about it. Rupee cost averaging. You want to buy NAV at the highs and lows. You want to beat the volatility of the market. This product allows you to do just that. We also now let's dive in and let's see the market as we stand today. So today, if you see the market, the last as of Jan, the market made a top of about 18,600 odd, and subsequently, if you see the market today, it's not yet beaten the yearly high. So we are currently, still right down, and it's starting to move sideways again. So we don't know, But if you see the fund, I'm going to show you the fund. So this is the funds of the company. If you see, this is the large cap fund. Okay, they bought stocks like Reliance, Infosys, ICICI Bank, HDFC. So these are companies that define India, right? There are no questions about it. So you're buying India's best companies. You're putting your money in India's best companies. How has the fund done last 1 year? It's delivered a return of 8.39%, right? So this is important to understand in wealth creation. The journey of the index, the journey of what's happening outside doesn't matter. What matters is when you're creating long-term wealth, am I getting what I'm looking for? And if you look at the long-term return, the fund started out in 2010, 13 odd percent, like I promised you, fabulous return. And somebody who's more aggressive, you can look at the mid cap. The mid cap fund buys Bharat Forge, it buys Walters, it buys BASF. Now, these are some of the best companies. I'm sure if you're an equity investor, you'll be very impressed to know that these are the stocks they have picked and see the return. Okay. The last 2 years since COVID, 26% is the annualized CAGR. And similarly, if you were to look at, the blue chip fund, again, it tracks the index. This is more fundamentally great companies. So they have the blue chip fund. They have the pure stock fund, which is the fund I was talking about. Reliance, Infosys. Just look at the return, double digit. And this is the new fund. This is the flexi cap fund, which basically, when the going is good, things are amazing. The fund can invest more money in mid and small. When things become more lopsided and slightly volatile, the fund shifts more money to large cap. So the fund manager allows. So this is a great fund to consider. This is newly launched. Okay. And then for people who believe that no, I'm not very clear, I would like a balanced option. I don't want to play around. I want something better, slightly better than my FD, but tax free. This is the balance fund for you. And let us say things get volatile and you're an aggressive investor, then like I said, there is no short-term capital gains. You can switch the whole money into debt. So you can switch it to the bond fund. As you can see, they buy some great AAA rated funds. And the best part about this is that the return has been amazing. It has been a good 8% since inception. And obviously, for the aggressive investor who wants to keep money short term, he understands the markets, he knows. Let us say you built a corpus of 4 CR, you entered 10 years back, you're expecting a market crash, you can put your entire money liquid. This will not react to yields, this will not react to the equity, so just freeze the money and you should get an annualized 5-6%. But the best part, because the money is sitting out here, the switching is not taxable. So this is the gist of why you want to consider this. So let's just look at a proposal. Okay, like I told you, because the entire pudding is in the proposal. So here very very clearly it says the return of the mortality costs. See, at the end of the fund. The proposal also talks about the return of the waiver premium. Okay, and I'm happy to share this proposal, custom proposal. Should you like the video? And the best part, does your mutual fund offer you loyalty additions? This fund gives you from the 5th year to the 9th year 2%, 10th to 14th 4%. So this gives you loyalty additions to stay. So you have to consider this. Your mutual fund doesn't do this. Okay. So here is the scenario of somebody who started this fund. Okay. As you can see, the fund management cost very very nominal, and after 5 years there is no lock-in. So should you not like the product, you can exit after 5 years. So let us take the example. I've put it in my name, okay, and I've made a commitment of 10 lakhs. Okay? So I'm looking to invest 10 odd lakhs, right? And if you see the fund management cost out here, you see the mortality, the cost of the 1 year cover. It is 42,000 in the first year. The way this product works is that the insurance cost is always on the differential between the fund and the cover. So you have a 1 crore cover here from day one, and your fund, let us say, has grown to 1 crore at year end 3,000 rupees. Okay. Next year it grows to, let us say, you're paid an additional 10 lakhs, it has grown to 20 lakhs 83,000. Then you're paid. So that the differential between the fund and the death benefit is the cost. So you can see the cost of mortality reducing here, right? The other thing is, the other charge is the fund management cost. Now you have to see this, you have to understand this. The fund management cost is also something that eats into your growth. And so if you see this, the person who paid this policy, you can see the loyalty additions coming in from the fifth year. 20,000 rupees, 40,000 rupees. And here the game changer. At the end of 15 years, the cost of the insurance, which is about 2,22,000 because you survived, nothing happened to you, right? And the cost of the rider, both are given back into the fund. So if I was you, I would compare this with my mutual fund. I would say first A, lower fund management cost, free cover, okay, and should I survive, the cover is returned, the cost of the cover is returned. I'm also getting loyalty additions for the entire period to help me gain a much higher return. And the best part, look at this person, he's triggered a life income. So out here, let me zoom in. So he now chooses to get a pension. So you can trigger. I have triggered a meager 4 to 5% of the fund. So I have instructed the system just pay me. So the money is growing here, and through the systematic withdrawal route, the money is coming to my bank account. At any point of time, should I want higher money, I can also take it out from the fund. Okay, so this is a nice way of managing volatility. And of course, you can switch between the buckets. So you can switch between the equity and debt at the click of a button. So you have these are the funds here. You can switch between the pure stock and the equity growth, or you can divide 50-50. And when the markets are volatile, you can switch into the liquid fund. So there's a lot of options in terms of managing the money and addressing volatility. So, to summarize, it's important to understand what am I getting. So you're getting a lower fund management cost. You're having the ability to switch between equity and debt. You're getting your refund of your the insurance costs, and you're getting access to multiple choice of funds. Okay. So, just to let you know, we are a one-stop shop, a financial destination for all your financial needs. Please feel free to reach out to Glennis or me. Very happy to help you, and please understand that if you like this video, you like the content, please reach out to us because I would love to share with you a customized proposal. The policy starts as little as 3 odd lakhs a year. You can try to shift some of your mutual fund portfolio into this product, to beat volatility. And finally, there is no benefit if you do not take things in your hand. So please block some time. I would love to show you the benefits of this product. Thank you very much for watching the video. Do like and share this video. Love by sharing this video by WhatsApp with some of your friends who you think might need this advice. Also share this with your spouse, share this with your brother-in-law, sister-in-law, and help us reach out to more people because this product is an amazing product. It's designed for benefit of all of you. I have won multiple awards for this product. So looking forward to hearing from you very soon. Thank you.